I'm going to get my loan at 2.5%. That's literally impossible.
So that's a very great video from Sean, which I thought was super cool, just on assumable mortgages. I don't, it's not really a secret, but I guess it's just one of those things we don't talk about a lot in the industry. I guess in a lot of situations it wouldn't apply. So basically, just to give a recap of that video, an assumable mortgage means that you as a buyer can go not only buy a home from a seller, but basically take over ownership of the current mortgage they have with their bank, right? You're assuming their mortgage. So if they had a mortgage with a 2.5% interest rate and you're assuming their mortgage, that means your mortgage is going to be 2.5%, right? It's not subject to today's market conditions because the mortgage was entered into in a previous market, probably 2020 or 2021, if we're talking about 2.5% in recent years. So that's great. Now, the challenges you may run into, besides the fact that not all mortgages are assumable, and many sellers are completely unaware that mortgages can be assumed, and some agents may be as well, is the challenge that the bigger challenge I think is equity. Like when you're assuming a mortgage, you're paying the difference between whatever you're purchasing that house for and whatever the remaining mortgage amount is. So let's say someone bought their house in 2020, 2.5% interest rate, and the remaining amount of their mortgage today is $450,000. Let's say $450,000. You agree to buy the house for them for $650,000, which is not not shocking given the way home prices jumped up tremendously in the last few years, right? So now there's a $200,000 gap. You're responsible to close that gap. So it's not like you're getting a regular FHA mortgage, buying your house, and you can do 3.5% down. No, you have to do $200,000 down to close the gap between what you're agreeing to buy the house for and what the remaining loan balance is. If you don't have that $200,000 cash, okay, which many of us don't, you can go apply for a second mortgage, but now that second mortgage is going to be subject to today's market conditions, and your interest rate will be much, much, much higher than that 2.5%. This is, of course, assuming the banks that you find are okay with being a second mortgage, and the lender that has the original mortgage from the home seller is okay with allowing you to get a second mortgage. These things are tricky, but definitely something interested. Always consult with your real estate professionals to learn about all the options that are available to you. Super cool video. Love it.